As we're finishing off 2024 in this week's Property Insider Chat, Dr. Andrew Wilson and I discuss how our housing markets have performed around Australia in 2024, including the My Housing Market latest figures for the month of December. If you want to keep up to date with our housing markets, why not subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. As we close the books on property in 2024, which has been a year full of surprises from economic shifts to changing buyer and investor behaviours, it's time to explore the latest figures from My Housing Market to see how our property markets finished not just the month of December, but the year of 2024. And of course, each week we do this with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market. Hi, Andrew.
Yeah, good day, Michael, and season's greetings to you. And of course, we're now moving into the new year, the next year, 2025. And as we say every year, gee, what happened to this year? It's sort of
Yeah.
flowing by at the speed of light, but that's the way it goes. And in a way, even though the year's gone quickly, it's been a bit of a same old for housing markets. And in a way, you said, well, it's had its surprises, 2024. But I think the surprises have been on the positive side rather than the negative side. And
Very much so. If
again,
you look back 12 months, all the forecasts that were made, Andrew, um, they were wrong. The fixed rate cliff, the mortgage cliff, the unemployment cliff, the people who were saying there was going to be all those distressed mortgagee sales.
that's right. Yes, I wonder how they look themselves in the mirror, but of course they just try to count the clicks, and that's what it's all about. And of course we'll be confronting that, in the next month or so when all the sort of the forecasting comes out. But I think it's been a very positive year, not just for the housing market, but also for the Australian economy. I think that the prospects for next year are just as positive, and we'll discuss that shortly. But just looking at the results, the final results for the last month of the year, which of course is December. When we look at the December quarter results versus the November quarter results initially, it was a bit of a quieter month or quarter, Michael, but that's no surprise there. There's two sort of general factors driving that easing in prices growth, which we recorded over the December quarter. And that, of course, is the distractions of the forthcoming holiday season. We tend to see fewer buyers and sellers coming into the market over December. But the other thing that's driving particularly reduced prices growth, Michael, is not so much the volume of activity from buyers and sellers. It's those affordability barriers, that rise through the cycle. And as we get prices rising, and we've had another good year for price growth generally in our housing markets, of course, it does start to restrict the capacity of buyers, even in a market where there are more buyers and sellers, to keep pushing up prices, because we are fortunate in this country to have a very strong banking sector. And by strong, I mean that it has significant market power with only 4 major banks. And of course, they do restrict lending for housing finance. We have that typically 80-20 LVRs, loan to value ratios. And those that take a mortgage are restricted with their repayment percentage of their income. Typically, they're not allowed to repay more than around about 25% of their income in a mortgage repayment. So that gives us the barrier around the market. So as we have changes in incomes and changes in interest rates, that causes disruptions in the market, and that gives us the capacity to push beyond those barriers, or not beyond the barriers, but to take advantage of any lags in that capacity for either a deposit or a repayment. But as the cycle advances, we get to the point where we just can't keep pushing prices up, because the bank won't let us lend, or won't borrow us, or won't lend to us any extra money, because we don't have either a lower clearance rate or a higher income. That's a bit of a long-winded response to why prices were a little flatter in December, but that's the story going forward. Unless we do have significant changes to income up or down, or interest rates up or down, we do start to see a flattening of prices growth. That's what we've seen this year, or towards the end of this year, although we've had another positive year. And I think that's what we'll see through 2025, all things being equal, which they aren't. But Back to the data finally for December. As I said, we had a flatter month for house prices to start with. We only had Perth and Hobart recording positive growth over the month. The smaller markets there, Hobart was up by 0.6%. Hobart up by 0.6%, and Perth was the other market that had positive response, up by 0.8%. And that Perth market, of course, has been outstanding over the last couple of years. But other markets, Sydney and Melbourne house prices were flat. Brisbane and Adelaide down slightly by 0.1%. Darwin and Canberra, Darwin down 1.3%, Canberra down 1.2%. And the national market responding to those weaker price outcomes, up by just 0.1%, Michael. But we can sort of roll the drums now and say, well, how did we perform over the full year? Well, national house prices up 6.9%, Michael, which was just really a touch under the growth rate of 7.9% over 2023. So very similar there. And over the past 2 years, obviously up by 15.8%. But when we do look at the comparisons of the capital cities over the past year, over the full year, we can see that, as we've known, for most of the year, Brisbane, Adelaide and Perth have been the strong performers, particularly Perth. Perth house prices, annual house prices, up by 22.7%, clearly the top performer. Adelaide and Brisbane, very similar, 13.5% increase in house prices over the year in Brisbane, 13.6% increase in Adelaide over the year. And over the past 2 years, Perth up 41.9%, Michael. Perth house prices, I'll say that again, up 41.9% over the past 2 years. Adelaide up 26.2% and Brisbane up 27.2% over the past 2 years. So very strong results there for home owners in those three capitals. When we look at annual results in the other markets, Sydney up, solid result, 5.7% rise in Sydney house prices. Melbourne, of course, has been that underperformer, as we've known for the past couple of years, really has struggled to shake, I guess, the confidence downers that it had through that COVID lockdown period. Melbourne house prices down by just 0.9% over the year, and over the past 2 years, up by 2.3%. The smaller markets, Hobart up 1.1%. Darwin down just 0.8%, Canberra up just 0.2%. So the strong results over the year for most of our markets, certainly the three boom markets of Brisbane, Adelaide and Perth. Sydney solid, Melbourne really moving sideways. So all in all, that's contributed to that 6.9% rise in national house prices, Michael.
As house prices became more expensive, more people started looking at apartments, at townhouses. Interestingly, the apartment market also performed well, Andrew.
Yes, as you said, it's the energy of those substitutes in a market with rising prices. Unit prices performed better over the month compared to house. When we look at the national price outcome, even though most capital cities recorded higher unit prices over the December quarter compared to the November quarter, the national house price actually was flat. And that's because this is a weighted average that we look at the national house price, because there is no national house or a national unit, is a weighted average of the capital cities based on the volume of activity in each of the capitals. And of course, the big capitals, Melbourne and Sydney, they take up most of the volume of activity. And of course, that means that their results are that the national result is heavily skewed towards what happens in Sydney and Melbourne. And unit prices in Sydney and Melbourne, Michael, were actually lower over the month, not significantly lower, just down each, Melbourne and Sydney, by 0.2%. But all the other capitals recorded higher unit prices over the quarter, Michael, with Perth again charging forward, leading the pack, up by 2.3%. And when we look at national prices, again, pretty similar to what we saw with houses for national annual unit prices. Sorry, Michael, but I meant annual, not national. National prices, anyway, let's look at that, up by 5.6% over the year. A little bit lower than houses. Sydney unit prices up by 4% over the year. Melbourne, similar to houses, just down by 1% over the year. The Brisbane, Adelaide, and Perth, again, outstanding results. Perth and Brisbane, very similar there. Brisbane unit prices, Michael, up by 25.5% over the year. As we continually remind listeners here, viewers here, that there wasn't so long ago that the Brisbane market was being heralded as being oversupplied and saturated, but we've seen 40% increase in Brisbane unit prices over the past 2 years, Michael. So that really makes a nonsense of those predictions of oversupply in the Brisbane unit market. Adelaide up 15% over the year, Adelaide unit prices, and Perth up 25.2%, Michael. So some big returns. The smaller markets, of course, Hobart, Darwin, and Canberra, lesser so, have smaller unit markets, so they tend to be more volatile. And we saw that with Darwin, which we can see some erratic results from month to month. But Canberra market still remains quite subdued, down by 2.1% over the year for unit prices, and Hobart reasonably steady, down by just 0.5%. So overall, Michael, we saw flatter results over December. No surprise there. As I said, the seasonal effects impact the market in December. But the annual prices, I think, are all very positive. And as you say, they fly in the face of what was said a year ago from most of the so-called pundits. And in a way, it reflects what a strong and steady economy we have. And of course, we haven't had a change in interest rates all year.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. At the moment now, a lot of the commentators are saying, oh, look, there's so many houses on the market, that market's going to fall, crash again. They're not using the crash word as much as they did a year or two ago, but they're concerned. My feeling is that most people who are putting their houses on the market are also looking to just trade up, trade down, right size. Most sellers are also buyers, Andrew.
Well, that's right, Michael. We keep repeating this. It's weasel words from the media. You know, they're looking for a cheap headline. They're wrong every year, so I don't know how they justify their position. But as we know, the media is struggling, and I think they'd be more worried about the lack of viewers and you know, actual clicks they're getting on their product, because it just doesn't cut through anymore. And as you said, most buyers are sellers and sellers are buyers. We've had actually a really big year for listings this year, Michael, because a lot of sellers, having regained confidence through 2023, have come back into the market. But as you said, most of them are buying in as well. So it's sort of trading. And how do you justify the price rises if, you know, they're starting to, you know, predict an oversupply? And of course, they're the same media who's been pumping up the prospect of an interest rate cut. And can you really tell me that an interest rate cut would be bad news for the housing market? It would be just the news they need, as we are getting those affordability barriers restricting the capacity to pay more, to borrow more. If we got an interest rate cut, that would release again more energy into the housing market, particularly given we have an unequivocally strong economy. You know, the latest economic news, which we discussed here, is just tremendous, really reflecting just how strong our economy is. And you know, as I said, a lot of what is written about the housing market is complete nonsense, and we prove that every year.
Well, our first Property Insider chat for 2025 is going to be your predictions for the year ahead. So that's something for our viewers and our listeners to watch out for. But maybe we should give a little hint about how you see the next year playing out. I guess the years usually start the way they finish off. There were lots of buyers out there. We know that. We last week reported the strong auction results. There were still people, even in the last weeks of the year, wanting to buy and wanting to sell.
Yes, I think that there's really no sense of change in our market, Michael. Last year we began the year again with the predictions through the media of an interest rate cut. Interest rates haven't moved. In fact, the Reserve Bank started to talk quite seriously about an interest rate increase in the middle of the year.
That's right.
They've sort of half changed their mind with inflation falling sharply until we got that with some difference in their narrative, the RBA narrative in its last meeting. But that all changed when we got those tremendous labour market figures, that showed that we're still booming this economy. And certainly in terms of the labour market. And I would have thought that the Reserve Bank would be challenged, given how strong the economy is, the labour market is, if they were talking about lower interest rates, because that would only fuel inflation. US inflation data has come on the upside recently. They're now saying, the US, that it's unlikely they'll move on interest rates again in the future. There's big questions about whether they moved too soon and too sharply recently, the Fed in the US, given that we're starting to see upward pressure on inflation again. And of course, who knows what the Trump administration is going to bring us. But if it does bring us tariffs, that'll only really put upward pressure on prices, Michael. So, which is just completely the wrong environment. Strong economies, higher prices, but talking about cutting interest rates. And, as I said before, we haven't had a movement all year. So I think the Reserve Bank will continue to be steady as she goes. But it's always problematic to be forecasting, what's going to happen, Michael, because anything can happen. But gee whiz, it looks steady as she goes to me.
Well, it's always a bit problematic to forecast, especially about the future, as you say. But I am going to ask you to take out your crystal ball, and that's what we're going to discuss when we get together in the first show at the end of January in 2025. So thanks for being with us every week, Andrew, and your foresight, your forecasts, and your commentary. Because interestingly, just looking back over the last year, and our forecasts, your forecasts are on record. We don't take them off. We don't change them. They've been pretty accurate.
Yes, Michael. Well, as I said, I think that you discuss that in the context of the what's out there in the marketplace, and I think when they're sort of a little outrageous, it's not terribly difficult to toe the middle line and to be reasonably accurate year in, year out. But someone's got to be a winner from all that clickbait. Maybe it's us.
Okay, thanks a lot, Andrew.
Thank you, Mike.